Hello, everyone. All right, this is Terence once again, and my apologies for last week. All right, I was unwell. All right, so I kind of really took the week off over here from many activities. All right, now that I'm better, all right, let's get started for portfolio cash flows on Friday. All right, where we aim to add cash flows to our model portfolio that we built on a Friday, week to week basis over here. All right, together with all of you. All right, now if you're joining us for the first time, all right, please make sure you type this link, all right, in a brand new tab or window, all right, streamyard.com/Facebook, right? And then you see a blue color Facebook button, all right? Click it one time to approve your profile so that when you leave comments, all right, during this Facebook live session, right, I will actually be able to see, right, who's leaving the comments itself, right? Please please assist me to do that, all right, because it will help if I actually know who I'm addressing to, all right? Now, so if you can already hear me live at the moment, right, and drop a note in the comments to say hello, right, it'd be really, really awesome, okay? All right, because I just want to know that all of you can hear me well and fine. Now, while waiting for the comments as well, let me just quickly put out the disclaimers. All right, I will be making some suggestions during the session. All right, but these are all purely based on my own analysis and my understanding of the stock market. So these are and should be taken from an educational purposes, right? Because everybody's portfolio is slightly different. Yeah, all right. So you need to be aware of your own risk, your own portfolio capital, all right, and then make the decisions, all right, if you can, if you are willing to absorb the risk that comes with every trade, all right, and know what the risks are involved, all right, before actually placing them live on your accounts. Okay. All right, thank you very much, Melinda. Yes, I'm back, healthy and well again. All right, now, so let's get our Friday session started. All right, now, so without further ado, all right, I do want to keep it a short one because it is kind of like a long weekend holiday for many of you as well. Now, so as you can see in the markets right now, all right, the markets have charged higher. All right, so we had this kind of like a breakout over here, right, of the 4,550 level, all right, which was the previous high. All right, and the moment it broke out from this high over here, right, we saw it briefly, retrace, test the support of the breakout, right, and after that, all right, boom, all right, we went all the way up. Now, is this really a lot of funds actively pouring money into the market? And to be honest, the answer is no. All right, all that is playing out right now is really the algorithms and the trading systems. Right, the funds have not made moves for a really, really long time. All right, now the volume is just not there. All right, so what has been happening right now is steady program algorithm buys that are being triggered in the computer systems. Right, why? Because many computer systems are coded and designed to take the path of least resistance. The funds are not selling, right? But the funds are not buying either. Yeah, right. So there's literally very little, kind of like volume happening in the market or activity happening in the market, right? And there are no sellers. Why? Because the short sellers have been burned, right, with this breakout move over here. So it's like a pocket of air right now on the top. Yeah, okay. So it makes it very easy for these algorithms, all right, to slowly edge and push the market higher. All right. And also in the markets, there's very little bad news that is pouring out right now. Why? Because earnings are absolutely stellar. All right. This earnings season, all right, many companies have reported earnings that have beat the estimates that have been set out. Right. So, it shows signs of, the economic recovery, all right, or it paints the picture so, right? And the Fed is yet to taper. The Fed is yet to signal any rise in interest rates, all right, or part of their plans. So this have all buoyed the positivity in the markets. But everybody knows that it's a little bit frothy. Everybody knows it's a little bit dangerous as well, right? So there's a lot of caution in the wind, right? So knowing this, right, the only worst part is this, right? There is absolutely zero, all right, I really say this, zero sell signals, right, that are pouring in the market. So even if you want to be a contrarian, all right, that means trying to go against the trend because you think that it's already hit the extreme, right? The problem is this: there are no signals, there are no indicators, right, from all technical fronts that says that this market can possibly turn, right? Look, right, if you think this was high, all right, you would have gotten burned today because the S&P just went up by another 37 points. Yeah, right now. So this is a very dangerous move, all right, if you try to do so, right? What you want to do right now is probably, all right, if you're a technical trader, right, wait for it to settle, all right, let it come back down, right? This is not a point where you try to time the market top. No, right? It's going to be a very expensive affair if you try to do that, right, you'll be better off, all right, if you allowed it, right, to fall back off over here. Yeah, okay, because when you allow it to fall back off, right, yes, you lose some profits because these are periods where it needs to turn off. All right, oh, Terence, it falls from 4,007 all the way back, right? I will lose so much profits, but right, you are guaranteed much more in terms of safety. Yeah, okay. Now there is absolutely no downside risk right now until the S&P can actually crack, right, the last high, because the previous high has now turned into a support. Right, so nothing is going to change this bull right now, okay, or the sentiments, right, until it comes back down, right, and cracks this support level. Yeah, right. Then we'll say there's the more downside coming. Right. Otherwise, right, there is absolutely none at the moment. Right. So don't go shorting on the markets. It's a very, very dangerous game. You can go shorting on overvalued, over hype stocks, but not the entire market. Right. It's going to be a very dangerous game. Okay. Now, but with that said, all right, we still have to drive the portfolio, right? We have to take advantage of what's available as well. Right. So let's quickly look at the portfolio right now, right, and then make our decisions, all right, on what we're going to take and actions involved. Right now, so these are our model portfolio trades, right? We have a VZ right now, okay, where we have 300 shares, okay, where we own them at 57.50. Right now, VZ has climbed up, right, but it's still sitting around $52.30. Right, $52.30. Now, so we're not going to do anything at the moment, okay? All right, so we're probably going to hang on to it, right? And let me just give me a minute. All right, let me just check. All right, because I'm just not sure if I had a typo error on the expiry dates, all right, of the call options. Yes, it seems like I'm right. All right, the call options on our VZ have already expired on 15th of October. All right, so this is already in the bag. So now, all right, let's see today if we can add a second set, all right, of VZ calls, okay? Right, and see that if it's worthwhile for us to do so as well. Right, as usual, right, it seems like when I run the StreamYard, software over here, it takes a demand on my computer. All right, let's just see 2 weeks from now, 55. All right, premiums are not rich. All right, if we go all the way out to December, all right, we can pocket a 21 cent. All right, but let's look at VZ. That's going to be like a 5% move on the up. Right now, let's take it. All right, let's drive some cash flow into our portfolio. All right, so let's go ahead and sell the 55 calls, right, on our VZ stock ownership for about 23 cents today. All right, so I'm going to add the VZ calls, all right, for 23 cents today. All right, hang on for a minute. Okay, so we're going to do the 17 December. Right now, remember, I'm doing this because I actually own 300 shares of VZ, right, from the assignment on the put options that we originally traded. Yeah, okay. If you don't have the stocks, right, you should not be following this trade. Okay. All right, now, so I'm going to go ahead and sell 3 contracts. Okay, at 22 cents. All right, so the order is done. Okay, now, so just for all of you to verify over here, I sold 3 of the VZs over here, right? December 55 calls, right? We sold 3 at a price of 22 cents over here. All right, so that's going to be a new portfolio cash flow, right? Where we add 22 cents into our position right now. So let's add that up. Right, so this is going to be a 17 December expiry, right? 55 call, right? We're doing it on 5th of November. And we just added another 22 cents. It's exactly the same. All right, now, so I've added that portfolio cash flow, all right? And Oh, my banner? Apologies. Oops, not this one. This one. All right, thank you very much. All right, thanks for the reminder. All right, now, so we have added the 17 December, all right, 55 calls on our VZ position. All right, let's go to Rio. Right now, if you can see on the left watch list over here, Rio is trading at about $60.30. All right, our stocks are assigned to us at about 77.20. All right, okay, now, so collecting about 260 right now, we have a break even of around $75. Right? And our current call options doesn't expire to 19th of November. Right? And here's the deal, because some of you asked me, right, Terence, should we close the calls? Because it's almost the premiums are really, really cheap right now. The question is this, all right, if you have no opportunities to sell another expiry of call options, that means, right, you close this trade right now, right? You pay a certain amount to close, and you can't add a new one, which means you're sacrificing cash flow, right? But there is no new set of cash flow coming in. Does it make sense for us to do so? Now, it doesn't sound very sensible, right? So I might as well just leave the call option there, right, until it expires in about 2 weeks' time, right? Because I can't add a position right now. The stock is at $60, right? So if we load Rio, right, the stock is trading at 60, right? I'm trying to sell a 75 call, right? So can you see it's literally not paying me any premiums at all? All right, so I might as well just let the current call option expire, all right, and collect everything that I sold it for. Yeah, that will make a lot more sense for me. All right, so for the time being, all right, we are doing nothing with the Rio trade, okay? Now, HIMX. So HIMX right now is trading at about, oh, it's up today, all right, 1181. All right, let's have a look. This will make it interesting. All right, so we have 12, is it 12? Yes, we have a $12 call option, which expires on 19th of November. So if we close it today, it'll cost us 80 cents. It'll cost us 80 cents right now. But if we go ahead and sell the December, all right, we can sell it for about 105. So by dragging it a further 1 month, all right, we would stand to make an additional, like what, 25 cents? Yeah, okay, in cash flow. I would rather not do so. All right, I'll take the chance. All right, I'll let this call option ride all the way to expiry. All right, and then see where it brings us. So no actions on that. All right, now the next one, PFE. PFE is up by about $3 today. All right, so I'm pretty sure we can close our trade for a profit. So I'm going to go ahead and do so. Now let's see what do we have. We have PFE, all right, a $44 put for 17th of December. We sold it for $224. Right, let's see how much it's worth today. Right, 44 puts. Oh my goodness, look at this. All right, okay, now we can close it for around 45 cents today. So there's only 40 cents left on the table with almost 6 weeks left to go. All right, what say you? All right, what do you want to do with this trade if you have it? Does it make sense to just hang on for 40 cents? Or does it make sense for us to take everything off the table, all right, and sacrifice this 40 cents, all right, of profits over here? All right, I'm going to go ahead and close this trade, all right, because it makes absolutely sensible decisions, all right, to do so. All right, so I'm going to. Okay, all right, now they took my order at 46 cents. So if you want to close this trade today, all right, it is going to be for 46 cents, okay? All right, now, so the PFE 44 puts, we bought it back, 3 contracts over here at 46 cents. It's done. Yeah, all right, now, so this trade is now officially closed. All right, so it's a good winner. Let's go ahead and record it. All right, so we close this over here for 46 cents. All right, now we opened this on the 17th of September. So this will make it about slightly under 2 months, right? Slightly under 2 months, all right? And we actually pocketed about $1.80, right? This makes it a good trade after all. Yeah, all right. So we close it today on the 5th of November, right? That will release the margin requirements, right? And we generate $174 in cash flow, right? And another winning trade, right? We close out a winner. All right, let's go to the next one, GILD. All right, no movements. So no actions, right? Intel, right? Intel has rebounded, right? But we have a 52.50 put. So we're going to hang on for this for a while, right? I do believe there's more upside on Intel. So we're hanging there, right? Coles has done another good run, right? We sold the 45 puts because it was very undervalued when we got in. Remember, the stock price was trading around $45 when we got into this trade, right? It was not too long ago in the middle of October, right? So this is going to be another good winning trade over here, right? We sold the 17 December 45 puts for 283. All right, let's see how much we can close it for today. 17 December 45 puts. Look at that. All right, we collected over $2. All right, so let's go ahead and close this as well today. All right, I paid 66 cents and it filled me over here. All right, so I'm done and I'm out at about 66. Yeah, I have a good profit, so I'm not going to negotiate too hard. I'm happy with 66. All right, so Coles December 45 puts, I bought all three back at 66 cents, so it's filled as well. All right, congratulations, Andy. Yeah, all right, good job. Right, like I said, all right, I will take the actions during the live sessions itself, right? So if it means sacrificing some profits, then so be it, right? I just want to, build this portfolio in a very, very simple manner, right? Where I try to make it non-time sensitive, right? To show that, trying to achieve double-digit returns, right? Being an option seller, right, is actually very, very possible, right now. So I closed it for 66 right now. So that's $651 in cash flow. That's really awesome. Right, 5th of November. Right, we released almost $26,000 today. Right, really awesome. Right now, CPB, we have a $40 put. All right, the stock is trading around $40. So, nope, right, nothing to go. Now, we released two stock positions today, and I'm going to take advantage, right, to add a stock into the portfolio right now. So, I'm going to go with another undervalued play right now, right? And today, I'm going to add a put option on Western Union. Right, so Western Union has been beaten down recently, right, by the markets, but it is still profitable, right, and it does pay a dividend which yields about 5% per annum right now, right, and it trades at a PE ratio of just 9, right. So from a company standpoint, all right, it has very, very attractive valuations, and like you see over here, I said, right, it has been beaten down, right. It is unloved by the market, all right, which is what you want to get in right now, okay, with the market so high. All right, you want stocks, all right, they are unloved. Why? Because they have been sold down, which means they are severely undervalued, right? So as long as they remain profitable, right, when the market starts coming down, right, money will flow out of the risky stocks, right, and they will start parking those money, right, into what we call defensive or undervalued stocks. Yeah, okay, so we're looking for that play over here. All right, so I'm going to go with a trade over here on Western Union. So let's go with the year-end rally, shall we? All right, so I'm going to go with a December, right, 18 puts. All right, so I'm going to go with a December 18 put over here. All right, so yes, I know some of you are thinking, but Terence, market is making a new high. Are you sure? Well, we are building an investment portfolio. Right, so if you are looking to add cash flows, there's capital in your account that can go to work. Right, do you pick a day and time? Not really. Right, you find the best trade, right, that's available in the market, right, and then you take it. Right, just focus on the safety behind the trade. Yeah. Okay. Now, so let's see. Okay. All right. Now, so I'm not going to waste too much time as well. All right. I'm okay with the trade. So let's go. Right, I sold Western Union December, right, 17, 18 puts over here. Right, I sold 3 today, right, and I got filled at 81 cents. Right, so I got filled at 3 contracts over here for 81 cents. Okay, now, so let's go ahead and fill this up, right, and do an ROI calculation, okay? All right, it is trade 75. All right, so we added 3 over here, Western Union, portfolio puts, all right, for 17 December. All right, it has an $18 strike. We're doing it today on the 5th of November, right? And I collected 81 cents. It's a pretty rich premium collection if you calculate it this way, right? And let's go to the ROI calculation. Oops, sorry. So this trade, right, pays 81 cents divided by $18 investment, right? So portfolio puts literally mean I'm setting aside $18 to buy the stock if I'm needed to, okay? Right now, this trade lasts for 6 weeks. And this stock, all right, or this put option that we're selling today pays a 39% return per annum, right, which is pretty rich. We are targeting a 20%, right, and this pays us 39%, right? So it fits the bill, right, and we have taken it, all right? That's the end of the story, right? So markets are hitting the top, right? I closed 2 positions, right? I'm adding back 1 more, right? So I'm adding back 1 more. So that's it, yeah? Okay, all right, now, all right, welcome, Brett. All right, congratulations on your win on Expedia and Peloton. Yeah, okay, but yep. Okay. Yes, Andy. All right, that's the reason why I trade Western Union. The PE ratios are really, really low. All right, so we closed 2 positions for profits today. All right, let me mark this out. All right, so there's 2 more winners over here. All right, and we opened 1 new position. All right, and that's it. That's what I have for this week today. All right, and let me take a couple of questions. If any of you have questions that you want to put out based on what we do over here. All right, so we are selling only, all right, very, very simple and very pure portfolio puts on our sessions, which are catered to the public, right, on Fridays, right, with a very, very simple goal, right, to educate all of you, right, about the idea of selling options, right, and how you can actually build an investment portfolio, all right, that doesn't own stocks, right, but selling portfolio puts on these strong companies as well. Yeah. Okay. Now the investment, it will be the same as stocks, right? Because we are setting aside full cash allocation, right, for every put option that we sell. Right. This will prevent you from any margin calls, right, or over leveraging on your accounts. Yeah, but of course, if you find that the capital is a little bit huge, right, Terence, can I do this with much smaller capital? Right, then you might want to consider one of our mentorship programs or even our annual trading membership, right, where we actually offer many, many trading systems on how to sell options to all our members. Right, so you can learn, right, and then you can trade with us the entire year because we trade 2 live webinars every week, right, with all our members. Right, so it's very, very, interactive, right, and very, very dedicated as well, right? So you will definitely learn and improve yourself, right, as an option trader, right, and more importantly, so as an option seller, right? If you do decide, right, to take the next step, right, and join us as a member. Okay, no questions today, everyone? I was just literally talking about something, all right, while waiting for questions to pop up. All right, awesome. Right now, but if there's no questions before we end, all right, can I just do a holler out, all right, for all of you who are joining me today, all right, if you did enjoy the information that I put out today and you find it useful, right, could you just help me click the like button, all right, and also the share button, all right, if you are more than happy to do so, okay? All right, now it will really help us, all right, to let the video, all right, reach out to more people using the Facebook algorithms, right? And of course, then we will be able to benefit more people out there, okay? All right, now, definitely not, all right? Like you said over here, Andy, all right, if a stock is trading at 20x PE, all right, it is still expensive, right? It is still expensive, all right? So if you're looking from valuation from a PE perspective, all right, 20 is not cheap, right? Because anything above 15 PE, all right, will make the S&P 500 considered overvalued, all right? Anything higher and higher is just more overvalued, all right? Now, so when you're paying something that's higher than 15, then, all right, you have to start asking yourself, right, is there growth expectations out of the company? Right? If there's no growth expectations out of the company, then it is very purely overvalued. Right? So yes, it may have been sold down, but it also means that there can be more selling, right, before it actually becomes cheap. So you have to think very, very hard over here. All right. Now, so hopefully that helps you. Okay. Right. It does seems like we don't have any questions today. Right. And let me bring this session to a close because, like I said, it is a public holiday weekend. So I don't want to hold you two back on a Friday night. All right. Let me return it back to all of you. All right. And okay, I will be back for next Friday. All right. So join us again for Portfolio Cash Flow on next Friday. It will be the 12th of November. All right. So I'll see all of you on the 12th of November. And just a headline. All right. Markets open 1 hour later next week. All right, so markets open only at 10:30 p.m. Singapore time from next week onwards. All right, so our portfolio cash flow sessions on Friday will probably start now at 11 p.m. Okay, so I'll probably adjust it to start at 11 p.m. next week. All right, so I'll see you same time. Sorry, not same time, same channel, same day. All right, and see you next week, everyone. All right, have a lovely weekend ahead. Bye bye for now.